Hey guys, welcome back. Check out this video.
What's going to happen if the house is dropped on value?
Yeah, that's the worst thing that a lot of people are saying.
Even just 10%, let's just
Yeah,
say.
if it drops, you're not going to be able to refinance, because when you refinance, it's like getting another loan. And they're going to be like, no, we can't give you the loan to cover your old loan because now your house is worth less than what you owe. So you're negative. And that's what a lot of realtors get wrong, is they tell people date the rate, marry the house. And
You're
yeah,
going to make a lot of enemies.
I'm sorry. I have friends that are realtors. They know
Yeah.
this, that if you buy a house, especially with the high interest rate, and they're like, no, it's okay. The rates will go down. But what if there's a little correction? Even just a little correction, 5, 10%. When you put that down, when you're paying your payments, especially with high interest rate, barely anything is going to the principal. You won't even be able to refinance. Even if the rates go down, you're going to be stuck with that high interest rate. I hope you guys know that, because if there's a little correction, and yeah, okay, I can refinance, but your house is worth less than what you bought for it.
Even just 10%. Remember, we're not talking about like a crazy drop.
Yeah, we're not saying 50% drop. Even 5%. You're going to have to make up that difference.
All right, Kirby, go for it. What are your thoughts?
Uh, they they have some great points in this video. I have so much to say, I don't even want to start. All right. Again, they have great points. They have great points, and that is something that is very misconstrued in the mass media. I don't care if you're Democrat, Republican, whatever. You always see the headlines. We have we have homeowners with $5 trillion worth of equity in their home. And then people just think, oh, because I own a home and I have equity, then I have a right to that money. No, you don't have a right to the money. I mean, people have heard me on here ad nauseum say, marry the house, date the rate. I still believe in that. But I also believe in you never pay list price for a house. Now, I've said that way more than I said marry the house and date the rate. You never pay list price, because the list price is a wish pricing that the seller wish that they can get. And Alex, I sent you a post on it, and I posted on our Discord. This guy in Georgia, he just remodeled this duplex, and I offered him a deal. I offered him a seller finance deal, and I offered him a conventional loan deal. The seller finance deal was at or close to the price that he was asking for, but he was out of town investor and he didn't want to do seller finance. And then the conventional rate deal was about $20,000 less. And then he said, no, he's not at that point. So then I just kept my eye on the deal. Now the property is still up for sale, but now it's lower than my conventional loan price. Like $20,000 lower than the conventional loan offer that I offered about 3-4 months ago. And that's why I'm always a stickler on be aggressive when you buy, especially in a high interest rate market, because the nuance or the understanding that just because you have quote unquote equity in a home that the bank is just going to give it to you, no, you have to be able to cover it. If you don't have the ability to cover it, if you don't have the income to cover it, it's not going to happen. And then they was getting it mixed up a little bit in this video of, talking about refinancing, that's taking money out and then refinancing just to drop the rate down. A refinance is going to cost you money. If you don't have the money to pay for it, then you won't be able to quote unquote tap that equity. But the only way that you get true equity out of your home is if you sell it, or if you do a 1031 exchange on it. That's the only way that you can get true equity. And if you're not selling it or exchanging, the same thing. If you're not selling it or exchanging it, you will not have to have that money risk-free. Even if you refi a home, it restarts your payment calendar. Even though you got a lower rate, it restarts your payment calendar, and then your payments might be a little bit less, but you're going to pay more because now you're going to add it. Let's say you've been in the house for 7 years, 6 years, 4 years. You just add another 4 more years to your payments that you will be paying the interest. So unless you're selling it, then you really don't have any equity, because you have to meet those same obligations. Like you refi or cash out or try to get money out of a home, you still have to have a job that's going to pay for it. You still have to have income that's going to be able to cover it. It's not just, hey, yeah, we care about you. You know, your house is worth $200,000. You paid $100,000. You got $100,000 equity. You don't have no job, so we're just going to give you $100,000. That's not how this whole game works. And this is how a lot of people are going to get trapped, especially those people that was paying over asking price during COVID. They're going to think that, oh, I can, they might be at 2 or 3% now. Now times is hard. And then now they need to refi, but they be like, I got all this equity. No, you don't. People that's been buying in the last 2 or 3 years and they thinking that, oh, I'm just going to drop the price. I'm just going to drop the rate, but I paid list price or higher for the property that, oh, I'm going to refi it. No, you're not. People will be stuck in bad situations. And then people like Alex is going to come knock on the door. Hey, can I just take that off of you for 50% off? That's what's going to happen. That's what's going to happen.
Oh, man.
But Alex, what you got?
Kirby's always making me sound like the Grim Reaper, just waiting for people to die off. No, it's true. A lot of people, I think they fall into like these like fallacies of real estate. Like they're not understanding how buying a house works. Like most people don't know, when you buy a house, you're not paying anything on principal until that 10th year into owning the home.
7 years.
Yeah, it's like you're barely paying anything down, and so you don't really have much equity. And especially for most people that put down only 3.5%, 5% down on a house, you're not chipping away at anything. And especially like one that always gets me is like the appraisals. People would be like, oh, but my house appraised at this. I'm like, you don't think that the lender helping you buy the house that sent their own appraiser wanted you to get the house, so they just appraised it around what you were trying to buy it for? Like like they want you to buy the house, so yeah, they appraised it for that. There you go. But it's not that it's worth it. I mean, we see that with I saw that with buying the duplex. I thought it was hilarious. Like one side is vacant, one side's renting for $450, but it appraised for $92,000 or something. Like, okay, yeah, it's a $40,000 property all day. But it's things like that. I mean, they don't understand these little things. They fall into all the lies and that the banks tell them, that the realtors tell them, and they get sucked into it, and then they're screwed. Like they weren't prepared for it. Like you've got to prepare for these things. I love the points that they brought up, especially bringing to light that you can't refinance a home if you are underwater on it. Like you can't, like, refinancing isn't just like a process you do to just like, oh, let me just let me get my interest rate lower. Like that, it totally depends on many factors. And especially, I know we were talking about this a couple weeks ago, but someone that that they want to refinance their homes, but they don't have any active income coming in. They have no income, so they can't prove. You have to have a job or something to show the bank that you can afford the new loan that you're going to refinance for. So people miss all of these crucial steps, and they don't realize that they put themselves into a bad situation that they weren't prepared for.
Yeah, I would make it simple. I'll make it simple for people. The same process you went to buy the house, you have to go through that same process again to refinance a house. Either to get cash out. If to get cash out is worse than that. It's worse than when you try to buy the house. But it's the same process. Your income. So if you figured, oh well, I could go buy a car, I can get some debt because I got, I already got the house and stuff, and I met all those obligations. Now you done brought your debt obligation higher. When you go to refi and your income is still the same or close to the same, they're not going to give you that refi. The same process. I don't know why. Well, I know why the media and the banks do it, because they can get people to trick people into taking money out and charging them more money. But people have some literacy about how this thing works. Just have some. The same process. Hear me well. I didn't refinance plenty. The same process that it took me, and it actually harder, especially when you're taking money out. The same process you went through to buy the house is the same process you're gonna have to go to refi. That's just the reality of it. And then most people, when they buy in a house, they know, oh, okay, I can't put nothing on the credit cards. I gotta have the credit cards off. And then now they bought the house, and now they go put the furniture in all on credit cards. Oh, now because I got a new house, I gotta have a better car. And then now they debt to income ratio is all out of whack. And then they go, hey, I got $50,000 in equity. Can I tap into my equity or can I lower my interest rate? The bank will be like, oh, your debt to income ratio is all out of whack. That's why, Alex, me and you talk all the time, and I always say, make sure your monthly obligations stay as low as possible because it gives you opportunity. It's a lot of nuances in that. I mean, it gives you opportunity to do refinances or buy properties when you want to, but it also gives you the ability to, if something happened catastrophic, let's say you lose 2 or 3 rental properties at one time and you don't have tenants, your monthly obligation is still low enough to handle it. And you can still keep on pushing on, pushing on. But people don't realize that. And then, of course, especially the people that, own an ox and it's their first house, they get their friends to tell them all the slick tips to get the house in the first place. But they don't tell them, hey, you got to continue that because if one day you want to refinance. I mean, I've seen people lose houses because they thought, oh, because the seller approved it and then we went through the initial paperwork and underwriter said everything's okay, but you don't have a final statement, then they go swiping their credit card, getting furniture, getting new cars, decorating, getting the stuff to decorate the house, and then closing time comes, and then they do that final pull or see the debt to income, and then they lose a house. So now you're trying to refi and you actually did it after you closed on a house, and then now your debt to income ratio was out of whack, and then now they won't let you do it. So all these people that got that money trapped or they want to tap into their equity, everybody ain't gonna be able to do it. All the equity is gonna go by the wayside, especially now with the inventory rates keep going higher and higher and higher. With people putting their house up for sale and they're not selling, the value is gonna dwindle down. The little equity they had is gonna go away, and then that's when it's time for me to get back to work. Especially here in the Florida market. But that's the things that people need to understand. Have a little understanding of how money works. The knowledge is the key. The knowledge is the key. You can get anything once you have the knowledge. But no, it was a great video by those gentlemen. I don't know who they are, but that was a great video.
Man, that just hurts my soul, man. The people buying every That sucks, man. They're buying everything for the house, and then the bank's like, "Yeah, what's all this debt?" Take the
Yeah.
house right away from them. Damn. Oh my goodness. I can only imagine the heartbreak on those families.
It's sick. It's sick.
But people do it to themselves. That's the point I'm trying to make. Like you got to prepare. Like I never even had this mindset, but when I had this mindset before learning about investing. Like you've always got to be prepared. I mean, as simple as something like I remember I told you this years ago that, you know, I think I was making a sale, but in I wasn't counting that I had the money until it was received. Like and it was a high dollar item. And I see people make that mistake all the time too. They know that they're gonna sell something and they've already counted the money. Like, oh, I've already got it. Like, no, until it's in your account, you don't have shit. And people like they're always unprepared for, events like this. But with all that being said though, guys, if you have any questions or comments, let us know down below. Don't forget to like the video, share, subscribe, and we will see you guys in the next one.